mission. It's what we call an Article 4 consultation mission, which is an annual review of recent economic developments in Kazakhstan, the current situation, the outlook for 2017. Foster or support global macroeconomic and financial stability. So when the world's economic situation is becoming tense and volatile, the IMF is there to give policy advice, to provide financing, to help countries in the world. We have some special facilities that have a grant element of the financing that's provided. And the policies that we're advocating increasingly try to look at what we call inclusive growth or inclusive economic policies to try to target policies that benefit the poorest people with our Christine Lagarde, also to target engagement in the economic situation. So how do we do all of this? Three major operations. The first is what we call survey or nadzor, I guess in Russian. It's a bit of an unusual for natives. So it means that we monitor and provide an assessment advice on global level. We have a publication called the World Economic Outlook, which looks at the economic situation globally twice a year. We have a regional nadzor, which we have economic outlook for places in Central Asia. That's again twice a year. And we have kind of country level, which is what this mission is doing now. So the economic in Kazakhstan, providing policy. Yeah, famously we a loan countries that find them in a difficult situation. Often these that don't have markets on their own because the economic situation in the country is complicated. So they can the International Monetary Fund for short-term, relative-term financial support. Our loans are in the range of 3 to 7 or 8 years term. The third thing that we spend a lot of time and resources doing, about a third of our operation, is in supporting our members as they develop their policy institutions, their cadre. We give a lot of technical assistance and advice in our major areas, monetary and financial sector issues, fiscal policy issues, raising tax, spending money, budgeting, on statistics, and then on the legal framework for policy. We also give a lot of training, and we do so in Washington, for Central and Eastern Europe, in Vienna. We have an institute in Vienna, and more online training. So you courses from the IMF on financial programming, on some specific policies online. Most of the courses, but there are some courses now in Russian. Let me give you a little bit more background on the IMF. It was founded in at the end of as World War II was coming to a close. You probably know that the Soviet Union didn't join the IMF. It took 3 loans from 1995 to 2002. This was before the oil revenues really started to pick up with Tengiz and Karachaganak in the late 1990s, and there was a need for creation of internationally recognized methods. The last report on Kazakhstan is getting a bit old at this point, but this new report that the mission will prepare after return to Washington should be available in early May. You can get data and reports on neighboring countries, on the Central Asia and Caucasus region, on the global economy, lots of things at IMF.org. So let me turn now and let's talk about Kazakhstan. The main points I want to make from the discussion are the following. First of all, congratulations to all of you on the 25th anniversary of independence in December 1991. to December 2016. You had a lot of achievements over the last 25 years, major achievements. I came to Kazakhstan in 1994 and in the European Union area. These are Kazakhstan's three major trading partners, and this change in the economic environment has presented some significant challenges. However, your authorities have strongly, they've responded strongly in monetary policy, in fiscal policy, and in structural reforms. On fiscal policy, I'll highlight later in our discussion the Nerlijol initiative, which was, and there's some specific challenges which we'll discuss. So let's turn to all of these issues for a few minutes. As I mentioned, there was quite strong growth in Kazakhstan until 2014. This was supported by rising oil prices. You can see on the chart on the left there, we have GDP growth and oil prices there. You can see from, and over the decade, averaged much more than 5%, to something like 7.5% a year. It started to slow recently. Because of that, Kazakhstan's GDP per capita reached on a purchasing power parity basis, and also low debt, so it was not vulnerable to capital market changes. However, economic activity and exports in the country are quite concentrated. So growth during that 15-year period was driven by oil and gas and metals, and it was also driven by, and you can see that the blue and the red parts of the bar combined to be over 80%. This is oil and gas plus metals. So Kazakhstan's exports are really quite concentrated, and its economy therefore is vulnerable to changes in commodity prices. So let's talk about the shocks that have hit since 2014. You can see in the left-hand chart, which shows GDP growth and oil prices together, that when oil prices started to drop, growth moved right down with it, and was below zero for a period of time earlier in 2016. It started to recover now, and we see that growth has also declined in Russia and China, and remains low in the European Union. You can see from the right-hand chart that growth was negative in Russia in 2015, quite significantly negative, almost -4%, and it remained negative this year. Some of that was due to sanctions after the West applied on Russia after Crimea and Eastern Ukraine activities there. Growth in China has averaged over the last 2 decades about 8.5–9%. So growth is still quite strong in China. It's well off of where it was actually. And we all know that the European Union has undergone a lot of strains in the last few years. Concerns about the euro, concerns about debt, and growth has been lower in Europe. And we've seen this before. Some of you might remember that during the global financial crisis in 2008 and 2009, there were similar set of developments. So this particular looks at that. So we saw a slowing of growth in 2015. We saw an oil price shock after the global financial crisis. Oil prices slumped significantly. We saw weaker fiscal positions, so less oil revenues, more spending. So the fiscal balance worsened in 2009, again in 2015 and 2016. We saw with lower oil prices in both the external current account deficit. We saw loss of funds in the national FRK. We saw pressures on the tenge, and both periods of time we saw reserve losses as the national attempted to address the pressures, and we saw appreciation of the tenge and during both of these. And a key issue is that we see impacts on the financial sector after the 2008 crisis. Kazakh financial sector was really in very difficult shape. So banks were nationalized, non-performing. The estate market in Almaty crashed, and banks were left with high non-performing loans. In fact, that issue was never addressed decisively. So the issue of banks with a balance sheet has stayed with almost 10 years, and that's a critical issue. But these two shocks are different for two important reasons. After 2008, oil prices went back up to over $120 a barrel, so it really provided the basis for a recovery of finance in Kazakhstan. And then these are kind of long and late for several years. As I mentioned, 9%. In fact, industrialization very strong, very construction, and that helped Kazakhstan because of supply of metals. So for China, exhausted. China has significant debt. China to grow strongly and save Kazakhstan now. So that's why these two crises are different. Environment coming out of these shocks is quite different. The policy response, that the policy response by your authorities has generally been quite sound. Over the last year or so, the National Bank of Kazakhstan has been working to change Kazakhstan's monetary framework quite significantly. It's a framework that was based on a fixed exchange to now on inflation targeting. And targeting inflation idea is that the central bank strengthens its analytical. It has an inflation target that it's trying to hit, and it has projections on econometric. So it on whether it's going to reach that target or not at a horizon. So then the bank adjusts the interest rate, the base rate now to influence short-term interest rates with the idea to control and manage liquidity in order to hit that inflation 12 to 18 months out. So it's quite a different system. It's not the order to the inflation target 12 to 18 months out. So the bank needs to know something about rate, domestic interest rates, how it affects liquidity, and how 6 to 8% the current range time and will get lower plans. Inflation targeting frames that didn't want to eventually, if you ran out of reserves, or if you felt that the price adjustment was permanent, and adjusting the exchange rate for is so some countries with Australia, Canada, they started to develop this inflation targeting where the changes in prices would be reflected in the exchange, and the central bank would keep its focus on domestic price inflation. So that's a different framework. What's some of those countries as well? They had a longer period of time, a more stable to begin with. Dollarization of the Kazakh financial system is over 15, and the National Bank has pretty much stayed out of the market since then. The exchange rate has been pretty stable. After it hit about 380, 385, it started to creep up during the course of the year. That generally reflects a couple of things. One is oil prices have strengthened over the past